Well, good morning and welcome. This is the Friday morning webinar with Illinois Mutual for the what is it, 20th? Yeah, 20th of March. Welcome. We appreciate you taking the time out of your schedule to get a little bit more educated and a little more informed on disability income in particular, carriers available to Western and Southern producers. And what I want to start with is just talking about, first of all, why Illinois Mutual, the fact that you don't have to be an expert in the disability marketplace in order to be successful with it, so that you have a better understanding of just kind of the simple 1, 2, 3 steps of disability income to make it a little bit easier for you to present this to your clients, a little bit easier for them to understand, and ultimately wind up increasing the amount of production and sales. So let's go ahead and get started. First of all, again, you don't need to be an expert in DI to get started. That's why we're here. We're the brokerage arm that works with all Western and Southern agents when it comes to all of the disability products that are available to you, as well as the life long-term care hybrid product, which we will be doing a series of webinars next week as well. But again, we bring the expertise to you so that, you tell us about your client, you tell us about what the perceived need is, and we will build and design plans that make sense, that are affordable, that meet the need of that client. Again, we want to make it as simple as 1, 2, 3, and we're going to talk about what that 1, 2, 3 process is, to where you don't have to ask a lot of questions of your client in order to be able to determine what level of coverage would be a good recommendation for you. One thing that's unique about Illinois Mutual, and that is that once a case is submitted to them and an underwriter has been assigned to the case, you have the capacity to speak directly with that underwriter. If you got a question about a case was declined, case was rated, underwriter has a question in the underwriting process, you can communicate directly right with that underwriter. Not a lot of companies allow that to happen. Illinois Mutual is still kind of a family-based organization, and one that I think you'll find is really easy to work with. It's 106. It's actually about 110 now. 110-year-old mutual carrier. They are a mutual company. It's run by the 5th generation of the same family. So there's been some continuity through that process over the last 75 years or so, with the same family running that business, and that makes it for folks like us who work with them every day. It makes it easier. Number one, it really makes it easy for producers like yourself because you don't see a lot of changes that come down. Which you can see in a publicly held company. A lot of times those changes are not necessarily for the betterment of the agent, the MGA, or even the policyholder. Many times it's for the betterment of the stockholder or shareholder. So that's avoided with having a mutual design company. It's easier than you think when you talk about DI sales. So why should you sell disability income? Well, if you're doing a financial plan for a client, if you're doing a fact finder to determine what level of interest there is, what particular products or services that you can provide to the client, what they actually wind up needing, that's why you should have DI in that scenario. Any fact find that you do on a new client should include questions about disability income, any annual review that you do with an existing policyholder, that you're just reviewing their coverage to make sure that it's kept pace with what's gone on in their life in the last year. DI needs to be a part of that equation as well, because things do change from time to time with clients, with employees. Maybe they had a baby, maybe they got divorced, maybe they got married, new jobs. All of those things enter into the picture, not only for life insurance and the need, to keep abreast of what's happening in the real world for them, but also for the fact that the client's life changes, and can change pretty significantly. When we talk about life changing, I don't think we've seen in this country, in my generation, and probably not in yours, a country that has changed so much in the last 4 weeks. And that change is probably going to continue as this whole, coronavirus epidemic, rolls its way across the country, and hopefully we get to a warm spring quickly, and we can move beyond this. But again, it's just making sure that your clients recognize and understand that you provide, a dedicated and a quality service to them, not only in the life insurance world, but from protecting their income. And to be quite honest with you, their income is their biggest asset, because without an income, these folks wouldn't be able to pay for all of the other stuff that they have and do. So we want to make sure that we're protecting that means that keeps that motor running. And of course, that's that income. And the easy way to explain DI. We'll go through that here in just a little bit, and the three simple steps to build a plan, and then some of the popular riders that you can consider. And as we get started into this, and we talk about riders, and we talk about the simple steps and that sort of thing, with disability income, not all clients are going to fit into the disability portfolio of a particular company. A doctor, a dentist, a lawyer, an accountant probably is not a good fit for Illinois Mutual. Although they would love to have those kind of clients, and they do insure a few of them, their main focus is in middle America. It's in that blue collar sector. It's in the working class of America. Politically, we hear that term working class an awful lot. In the terms of disability income, that just simply means it's the folks that are out there every day, use their hands in their jobs that they're doing, such folks as laborers, construction workers, carpenters, plumbers, electricians. Those are the kinds of folks that Illinois Mutual really caters to. It's where they focus their disability model. That's kind of their wheelhouse, and that's where we need to recognize and understand. So, if you've got a lawyer, if you've got an accountant, you've got an attorney, you've got a doctor, Illinois Mutual will quote it. They're not going to quote as much coverage as some of the other larger carriers that really focus on those occupations. What we want to do is make sure that you understand, where does Illinois fit into that overall scope of carrier offerings. And that offering is in that middle America, in that blue collar sector marketplace itself. So, and then what's in it for you? We'll talk about that. Not only the comp, which is pretty good on disability income, you also have the residual or the renewal income that comes every year that the client renews that policy. These have, we call them trails, and they're just the renewal commission trails that are pretty significant, that really allows you to build a block of business and get residual income every year as a result of your efforts from the previous year or previous years itself. Well, the paycheck has a big job to do every month. Doesn't make any difference who you are. We all pay for kind of the same things: mortgages, utilities, groceries, health insurance, auto, child care, car payments, and so on. All of these things are dependent upon our ability, to continue to earn an income and have that money and resources available to be able to pay for all of these. Well, what if the income were very quickly taken away as a result of a disability? Is your client prepared to continue to be able to pay for these things if the income's not coming in? So how much money have they set aside? How much money have they saved? How much money would be dedicated in the case of an emergency or a catastrophic event in their life? Latest numbers that I just saw that came out here about 4 weeks ago, it says that the millennial generation, currently about 25% of those folks have at least $100,000 saved. And the article was toting the fact that these, are savers in general, that they compared them to the baby boom generation at the same time frame, and it seems like the millennials were ahead of where the baby boomers were as far as savings in their careers and in their life. But what the article doesn't really highlight, it was just kind of a bottom blip, and that is the vast majority of this money that was saved, that $100,000 per millennial, uh, the vast majority of that was in 401ks. And we all know what's happened to 401ks over the last, 3 weeks with the stock market. It's been a roller coaster. There's no doubt about it. Is that really the plan that the client has in place for taking care of a catastrophic event in their life? You know, the intent of 401k naturally is to be there for retirement, so that the person will have adequate income to be able to live life to its fullest and to its extent after they retire. Not the intent for the person to tap into that as a result of a disability or catastrophic event in their life. The other issue with 401ks and have that money there is, what is it going to cost that client to access that money? There's penalties and there's taxes and there's all kinds of things that are kind of attached to a 401k and your ability to have access to it. So we're saying, yeah, 401ks are great. They're intended for a specific purpose, and unfortunately, disability income is not typically the purpose that we want to see people use when it comes to accessing money for a catastrophic event in their life. We want to make sure that they can take care of the basic needs, the basics in their life on a month-to-month basis if, in fact, they were to become disabled. Well, provides a benefit to help your client pay for the basic monthly expenses if they become totally disabled. Ask your client, how long could you go without a paycheck? How do you open up the conversation with a client about disability income? You're talking to them about retirement. You're talking to them about investments. You're talking to them about life insurance. Are you talking to them about disability income? And how do you bring that subject up? Well, an easy one, and the easy way to do it is simple as this. Ask them, what have you put in place to protect your income in the event that you're too sick or injured in order to work? What have you put in place to protect your income in the event that you're too sick or hurt to work? And they're probably going to give you a blank stare, not understanding what that question is, but it opens that conversation up to be able to talk about, where do you go from here in broaching that subject about disability income. And if the prospect understands and recognizes what you're asking, and they're saying, well, what I've done to protect my income is that I have disability protection at work, we want to make sure that we're not just accepting that at face value. Let's ask some drill down questions. Let's peel the onion back just a little bit. Let's find out what they have at work. Do you have your employee handbook? Do you have your last benefit statement, which outlines what disability coverage they have? Because they may think they have one thing when in fact on paper and what they really have is something entirely different. We want to make sure that they understand where there might be some exposure and some risk, and we have a solution to handle that risk or handle that particular vulnerability. Your client's protecting one of their biggest assets, and that is, in fact, is their paycheck. We want to make sure they understand that, because a lot of people don't. A lot of people think that because they have life insurance and they have health insurance, they're well taken care of. But they're really not if they've not put something in place to protect that biggest asset, and of course that being their income. Well, 90% of all long-term disability claims are due to illnesses, and most long-term disability claims are not work-related. Let me put it in a little bit different spin, and that is that less than 10% of all claims for disability are accident-related. Less than 10% of claims, but yet most people think that's what disability is. It's about the guy falling off a ladder, falling off of a roof, getting involved in an accident that made them disabled for a short or for a long period of time. That's what most people think when they think of disability. But we need to have a conversation about what is the reality. And the reality of it is that, number one, for the most part, they're not accidents. Number two, it's not work-related. And number three, it's probably going to be from a sickness or an illness. Just look at our current environment today and the coronavirus and what effect that's having on people. Some of these people are going to be out of work for 6, 8, 10, 12 weeks recovering from this, if in fact they do recover from it. That's a huge issue. And how long would our clients be able to survive if they went without a paycheck for that period of time? And just understanding what they have available to them at work will help you in determining whether or not you have a case with this client to pursue something about disability. Maybe they have a plan at work that has a very, very long elimination period before that plan actually starts paying benefits. Well, you have an opportunity to dovetail with that long elimination period plan a short term disability policy, basically paying benefits while they're meeting their waiting period on their long-term plan at work. Or maybe it's the opposite. Maybe they have a short-term policy, which we see a lot of that. They have a short-term policy that'll pay for only 6 months or maybe a year, but after that, it's not going to have any more disability protection for them. You can dovetail a plan on the back end of it to pick up where that plan at work ends. And as a result, they have continuous flow of disability coverage. It's just a matter of understanding and asking the questions and then showing them where their vulnerability, where their exposure, where their risk is, and then coming up with a solution to plug that hole. And that's basically all it amounts to with disability income when you're looking at wanting to protect that income itself. Although about 69% of the private sector workforce has no long-term disability insurance. And actually that number is a little over 70% now. So that means only 30% of private employers are even offering disability income protection to their clients. Do we have a huge marketing opportunity out there with disability income? And the answer to that is emphatically yes. It is a huge opportunity. Now, it doesn't have to be, that protection of a $500,000 income, of that highly compensated individual, because that's not where the majority of disability income today really needs to be focused on, and where products need to be sold. It's in the working class of America, in that middle America, folks that make less than $100,000 a year. Those are the folks that are really exposed to the risk of disability and are really exposed to not having a paycheck if they were to become disabled, too sick or injured and able to work. So keep that in mind, that only about 30% of these employers even offer any kind of disability income. And that's a huge advantage for us when we look at being able to present individual disability income to our clients. Well, the series with Illinois Mutual is known as Personal Paycheck Power. It's designed for budget-conscious people. That's the way this thing is built and priced. It's a great fit for middle America, no doubt about it, because that's where they're focusing in their occupations. It's built for people with incomes up to $100,000. That's really their wheelhouse, where they shine the best and have some of the best rates. Certainly, it's flexible and affordable. A lot of times, people will say, and agents will tell me that the reason why the client didn't go with the plan was that the client said that it was not affordable, or it was too expensive, or whatever term you want to use. Generally, what happened there in that case is that we showed a plan to the client for the maximum benefit that was available to them and the maximum type of coverage. And yeah, it probably did make that premium unaffordable. I can give you an example of just the opposite, and this really is where we should be focusing our efforts today. I've been working with Western Southern agent for the past 2 weeks. Got him contracted with one of our disability carriers. He sent me a series of requests for quotes on 4 different people. And those 4 people, various occupations, but all basically blue collar. But he put on there that he wanted $1,000 a month benefit on one. He wanted a $1,500 a month benefit on another. Their incomes justified that. That was not going to be an issue. And then he wanted to look at what would a 2-year and a 5-year benefit plan look like. And that's what we built for him. That's what was sent to him. And out of those 4 cases, he currently has sold 3 of them already. We've received applications on 3 of them because he understood the value of presenting something to the client that was going to be affordable. The one thing about disability income is that a little bit of something for disability coverage is still better than a whole lot of nothing. And that's the kind of the approach that you need to look at here. But one thing that I can guarantee you, and that is that if you don't talk about disability income to your clients, you will never sell it. You will never sell it to them, and you probably will never sell it to any of your clients. You've got to have the conversation. You need to build this into your fact find. Build it into your annual reviews that you're doing with clients. This should be something that just becomes ingrained in you, that every time you're meeting with a client, you're asking the question. If they told you no the last time, ask them again, because things change. We all know that. Their lives change. Situations change. That's why you want to be proactive about this. Give the client the power to help protect their income. That's what it's all about. Now, if we have any California agents on the call this morning, unfortunately, Illinois Mutual's products are not available in California. Probably never will be. California has a very strict state-run disability plan that covers clients or people that are employed there in the state of California. It covers them for the first year for disability under a state program, and makes it kind of tough for independent businesses to do business in the state of California. That's one of the reasons why they're not there. Alaska, California, DC, Hawaii, and New York, product is not available in those states. Some of it's because of regulatory issues, and some of it is just a matter of not being able to file the correct rates and still be profitable with that block of business moving forward. So putting the plan in place, who are your best prospects to talk to about disability, especially if you're new in the business, okay? And I know with Western Southern we get a lot of new folks, from month to month, and we just want to make sure that we're giving you, just a couple of little ideas of where you might want to prospect. I had a client or an agent, had an agent here probably 20 years ago that I was working with, and he was primarily in the life insurance business, was what he focused on. And he had made a statement early on in his career that I'm not going to personally do business with anyone that won't do business with me. Well, his list was pretty short on who he could do business with because he was new. But as his business grew, and over the course of the last 20, 25 years, he still holds true to that conviction today. And that is that the person that he's buying his groceries from or getting his car serviced or buying gas, getting his dry cleaner, whatever the case is, if those people are not interested in doing business with him, he's going to take his business elsewhere. So look at the places where you do business every day, where it may be beneficial for you just to have a very brief conversation with them. Where you get your car fixed, where you bought your car, who you bought your car from. Surprising that these people haven't ever been talked to about disability income. Local restaurant that you may favor. Again, that's just unique ways for you to look at, here are some real opportunities that I probably didn't even think about. Last time you were in the doctor's office, had your physical, did you talk to the nurse? Did you talk to the doctor about insurance protection, disability, whatever the case may be? Again, great opportunities. We just have to make sure that we're acting on those and paying attention to them. If you've been in the business for a while, who in your current book of business could you go back to and have a conversation about disability income now that you understand and can open that conversation up with them? And here are some examples, from each of the class occupations. Class 1, which typically is the more risky of occupations: carpet installers, roofers, certified nursing assistants. Gets a little bit better on pricing for mechanic, plumbers, and carpenters. Class 3, dental hygienists, physical therapists, and then the rest of them. The more risk that the carrier assesses in an occupation, the higher that premium is going to be. Now, the difference between a Class 1 and a Class 5 with Illinois Mutual might be a difference of 25% difference in premium. Excuse me. That just gives you an idea of what kind of pricing, a difference that there may be. One thing you do notice in Class 5, there isn't a doctor listed there. There isn't um, an attorney listed there. There's those kinds of people are not, again, in the wheelhouse of most of the things that Illinois Mutual does. Focusing primarily in that blue collar sector marketplace, that seems to be where their pricing is best suited. And you're going to find that from an underwriting standpoint, they really know what they're doing. This is not going to be uh, a labor of frustration as you move through the underwriting process and getting a case through through the system, because they know what they're doing, especially when you're dealing with blue collar sector type of individuals. Now, Illinois Mutual recognizes, like a lot of insurance companies do, and that is that farmers and ranchers, they need disability income too. Where a farmer or rancher may do a very good job of uh, basically burying his expenses or bearing his income with expenses on an annual basis to keep his income down low to where he's paying very little to no income taxes at all. And it's legitimate; they can do that. Running a farm operation is no inexpensive task, that's for sure. But at the same time, where they're benefiting from a tax perspective, they're not benefiting if they're trying to buy disability income, because disability income, for the most part, is always relying upon that person's income and verified income. So, if they're showing on their tax return that their income for the last year was $15,000, good luck trying to buy disability income of any proportion that's going to protect them. It just simply is not going to happen. So what Illinois Mutual did about 3 years ago, they looked at a formula that they could put together to where they didn't have to look at the income for the most part for farmers and ranchers, but rather look at how many acres does that farmer farm, or how large is his herd size, whether that be cattle, hogs, sheep, llamas, whatever it is that farmer's, that rancher's raising. And they could provide a minimum level of disability protection based upon those numbers of acres or herd size, and not have to rely upon that person's declared or verified income. Makes a big difference when you're dealing with farmers and ranchers that are showing reportable income that's very low. Just another unique way where you have a carrier that's really looking out for a segment of the occupational classes, and that being blue collar, looking out for those people and finding a way to make insurance not only available, but also making insurance affordable at the same time. These are some of the occupations that Illinois Mutual has very specific marketing pieces that are available if you want to work in these particular marketplaces themselves. Nurses and plumbers and carpenters, hairstylists and barbers. Believe me, we quote a lot of hairstylists and barbers. We write a lot of coverage with Illinois Mutual, with Western and Southern producers in that hairstylist and barber arena. These are folks, for the most part, are either 1099 or they're self-employed. They don't have benefits. But if they were to become disabled, carpal tunnel is a big concern for an awful lot of these folks. If they were to become disabled and couldn't work, their livelihood is gone. Their ability to have a paycheck, every week is diminished as a result of it. Farmers, mechanics, clergy members. It's really surprising that churches do not provide disability protection for the most part for their ministers or for the staff that's working in that particular church or congregation. Talking with the church board member about disability and how that's going to be a value-added service to the board and to the congregation, having that minister or that church employee covered with disability income, so that person, is going to be protected, and at the same time, the church is going to be protected by having that person have disability insurance coverage. Again, these are all areas where you can really explore, all areas that typically are not ventured into by most people that sell disability income. And that's where we really want you all to focus, is in these marketplaces where there's very little sales that goes on. There's very little resistance. And as a result of it, you're going to be talking with folks that have probably never been approached about disability income in the past. And that's a huge advantage from your standpoint. Now, what can happen here is that with uh, W-2 employees, you know, uh, we can have these folks here that are, that work for somebody, but in these particular prescribed occupations, you can actually get them a class upgrade from what is published in the occupation guide. Most of these would be considered to be a class 3 or a class 3A. You can get them up into a 4 or a 4A as a result of these um, specific occupations themselves. These are desirable, low risk type of occupations. And again, dental hygienists, dental assistants, veterinary assistants, not a lot of these folks have disability income. Think about that. Who do you go to for your teeth? Who do you take your pet to? Again, those are the kinds of things that you need to start thinking in terms of who you're doing business with currently. Why aren't they doing business with you? Makes it a pretty easy conversation. And one of the biggest hurdles is already conquered with these kinds of folks, and that is you already know them. Okay, you're a known entity to them. You don't have to get by that clumsy first meeting and this is who I am and this is what I do. Uh, they will be a little bit more receptive to listening to something that comes from you because you're a known entity at the same time. Now, skilled trade workers, carpenters, plumbers, electricians, HVAC machinists, mechanics, these are all folks, again, that we can give them an occupational class upgrade depending upon what particular occupation that they're in, because these are the desirable occupations that Illinois Mutual looks for. Okay, these are where they really shine. This is where they've got their pencil sharpened the best. So again, keep that in mind. There's a huge opportunity, a huge marketing opportunity out there by just starting to ask the questions. Okay. Now, talked about earlier about making it as simple as 1, 2, 3. Well, 1 is mortgage, 2 is utilities, and 3 is groceries. It's that simple. It's known as the MUG plan. Mortgages, utilities, and groceries. You don't know quite how much coverage to present to a client. Certainly, the guy makes $50,000 a year. Most carriers will insure 60% of that income, or about $30,000. Well, $30,000 might be more than what this guy can afford. So, what you want to look at from a base standpoint is, what's their mortgage or rent payment every month? How much do they pay in utilities? And then how many dollars does it take for groceries, put food on the table? So if you can provide coverage that's going to keep the roof over their head, the lights on, and food on the table, you've got a pretty good plan, at least a basic plan or a base plan to start to build with your client. The stuff doesn't have to be complicated. It really can be a very simple 1, 2, 3 step: mortgage, utilities, groceries, understanding how that works. Again, it may not be 100% of what this client wants or what this client needs. It's what this client can afford. That's what we really want to make sure. Because again, a little bit of something is better than a whole lot of nothing. And if I can put something in place with a client and covers $1,500 or $2,000 a month of their bills, and it's an affordable amount, I've got a win here. Okay, if I can put a plan together for you, Mr. Client, and that plan meets the basic needs for disability, how much would you be able to set aside to pay for this? It's another leading question to ask the client, or some form of that, however that works and you feel most comfortable with. But you want to get them to give you an understanding that if you can put a plan together that makes sense, meets their basic needs, how much money would they be able to set aside to pay for that? And if you attended our understanding of basic disability, in that we talked about ways to uncover potential for premium dollars, showing them where they're already spending money on things that they probably could scale back a little bit in order to pay for or fund a disability policy. So just keep it in mind, it doesn't have to be this grandiose plan that's going to, cover them until their, retirement age, and it's going to pay buku dollars a month, because in many, many cases, especially in the blue collar marketplace, it's not affordable. It's not obtainable, and it certainly isn't sustainable. And that's what you want to make sure. You want to put something in place that they understand, has value, going to meet basic needs. Okay. Now, how much does your client need? How long does the benefit need to last? How long can they go without a paycheck? So, I would say probably upwards of 80% of the quote requests that we get in are for benefits payable to age 65 or to age 67. Okay, and they've indicated on the quote request form the amount of benefit max is what's checked. Well, when we build those quotes, as you can well imagine, they become expensive. No doubt about it. The longer you're going to have the benefit be payable, the more premium they're going to charge. The higher the monthly benefit that that we put in the plan, the more premium it's going to cost. So let's look at what averages are and what the industry is telling us. Whereas we would love that everybody would be able to afford a plan to age 65 or to age 67, be maximum dollars, that's not in most cases affordable. Most plans today, from the standpoint of claims, what's actually happening in the real world with disability claims is that the plan itself or the claim itself lasts for generally right at about 2 years. That's the average claim in disability income. Average benefit is about $1,500 a month, and the average elimination period about 30 days. So we're saying instead of selling a plan that has a 90-day elimination period or waiting period, maybe rethink that, because most folks don't understand that a 90-day elimination period means that your client is not going to get any money from the insurance company until they've been disabled for at least 120 days. They have to meet their 90 days of the waiting period. They have to meet that first. And then the next 30 days, they have to go through that because that's actually the loss. And beginning on the 121st day is when actually benefit payments would be made to your client. That's a long time. That's 4 months that we're asking the client to wait before benefits are going to be paid or they receive their very first check. Relook at it from the standpoint of bringing that down to a 30-day elimination period. Have the benefit period be a 2 to a 5 year plan instead of this lifetime or to age 67, which in a lot of cases doesn't make a lot of sense. And simply have something that's really affordable. Okay, $1,500, for an awful lot of people, that's going to cover mortgage or the rent, utilities, and groceries on a monthly basis, or it'll cover the lion's share of that. The other stuff they can probably live without. And honestly, can we live without cable TV and the $180 a month that we're spending for that? Yeah, probably if we had to. We want to look at it from the standpoint of what are the basics that we can provide for the client that still provide quality coverage, but also provide that it's affordable. That's what we want. Now, when you write a case of disability with Illinois Mutual, if the benefit amount on a monthly basis is $3,000 a month or less, and they're under the age of 40, there's no paramed. There's no paramed, there's no urinalis, there's no PHI, there's nothing, okay? It isn't until they go beyond 3,000 up to that $49.99, then there's an abbreviated paramed, blood profile, urinalis, and a PHI. PHI is the physical history interview that's done over the phone. If they're between the ages of 41 and 50, the non-med requirement drops to $1,500. It drops to $1,000 for people between the ages of 51 and 60. Illinois Mutual will insure people, at least on an application for insurance, through age 60. Once they reach age 61, they are no longer eligible to apply for coverage. They're beyond the issue ages with Illinois Mutual. So just a little bit of information. This particular slide is in each quote that goes out. So for your particular client and their benefits based on their age and their income, it's going to show you what's going to be required as far as the medical requirements and whether or not there's any non-med that's required or available in that plan itself. So moving on, looking at some of the optional riders that are available. And again, I understand on the one hand when a producer or an agent sends a quote request in, and they've checked every one of these additional or optional riders because they want to see what they cost. The problem with that is that those numbers get added to the basic disability premium for the quote itself, and it brings that total to a number that in most cases, it just simply isn't sustainable. Keep in mind that most people will look at the bottom line or the bottom dollar number, and that's the number that's going to stick in their head. So make sure that when you're looking at these riders, that you're doing the riders that make the most sense, that meet the client's particular needs. Guaranteed insurability option. It's a low cost, very low cost. And what it does, it guarantees that that client is insurable for the remainder of that contract, provided that they exercise the options that are being offered to them to increase their coverage from time to time. Return of premium. This is a great feature, one that a lot of people don't understand or don't talk with the client about it. A lot of people are apprehensive when they buy insurance about buying coverage, never using it, and just looking at that premium that they paid as a waste of money. Yeah, sure, they had peace of mind, they had the coverage and so on, but unfortunately people don't look at it that way. Return of premium takes that issue off the table altogether. It just simply says that upon the maturity of the plan, whatever that is, depending upon what they purchased, upon the maturity of the plan, the insurance company will give you 100% of your premium back at that time, minus any claims that they paid. So if there was a claim during the course of the ownership of the plan, that claim dollar amount is going to get subtracted from their overall premiums they paid, and if there's a difference, that difference would be sent to the client. Most people look at it from the standpoint that I probably am going to be one of those people that buys it, never uses it. So what have you got that's going to help me from that standpoint? Return of premium might be an advisable option for that client. And looking at it from a premium perspective, again, the younger they are when they apply, the cheaper that rider is going to be. When they get into their 50s and you apply that return of premium, that's going to really ramp up that premium overall for that policy, simply because of the age involved with the client. Retroactive injury benefit. If in fact the client is injured as a result of this disability, it will give retroactive benefits back to day one that they were injured. In other words, it takes away that elimination period for the client. Integrated monthly benefit rider. This will help give more coverage for less money. And what do I mean by that? It allows Social Security to become part of the overall benefit structure of the plan. And basically what it's saying is that if Social Security, if the client becomes eligible for Social Security and Social Security pays any benefit to that client on a monthly basis, the amount of benefit that Social Security pays the client gets subtracted from the benefits that are available from their private disability policy. But because they did the integration with Social Security, they're able to have a lot more coverage overall than they would have had if they didn't have the integration with Social Security. So the coverage level is going to be a lot higher, but it brings Social Security into the picture. Now, you also have to look at it from the standpoint, what are the chances of Social Security being an entity that's going to have an effect on their personal disability policy? Well, first of all, 75% of people that apply for Social Security disability are denied benefits. Only those people that hire an attorney and go after Social Security and can prove to them that this client deserves disability benefits, and some of those cases are won in the appeal process. But you have to understand, what is the definition of Social Security disability versus what is the definition of disability with a private insurance company. Social Security states that you have to be incapable of performing the functions of any job, not the job that you had just before you became disabled or the job that you last had. No, it's any job, any occupation. That's pretty broad. Okay. So unless you can't talk and you can't do anything, you may be eligible for Social Security disabilities. But short of that, Social Security is going to say, you know what? You can be retrained. You may not be able to walk to that to that sales appointment, but you certainly can talk on the phone. You could sell via that way. And as a result, Social Security wouldn't pay a disability benefit. That's what you need to understand about the two of them. Sometimes integration makes sense. A lot of times it doesn't. You just have to have that conversation and understand how integrated monthly benefit riders work. And I'm going to give you a point to go where you can kind of get a little bit more education on that as to how that process works. Automatic increase benefits. This will automatically increase their monthly benefit on an annual basis and will do so every year. They pay an extra premium to have that on there. Cost of living adjustment. Pretty much the same thing as the automatic increase, except that this one is on a percentage basis and it's compounded. So it's either 3% or 5%, and it's against what their last year benefit was on a monthly basis. 2 or 5 year pure ONOC occupation. All plans have a 2-year own occupation provision in their plan, which means that if the client can't perform the functions of the job that they had just before they became disabled, and that's their own occupation, they have coverage guaranteed for the first 2 years. Beyond that, they would have to purchase an additional rider that would extend that out to a 5-year or to basically a lifetime to age 67, to where they couldn't be forced into a different occupation based upon their training or based upon similar income levels. But again, it's available. 2 years is automatically covered. The 5 into age 67 are optional riders. Non-cancelable rider. What non-cancelable means in a disability policy, it simply means that the insurance company can never raise the rates once the policy is issued. You pay an extra fee for that. Well, on the surface, it would sound like that might be a pretty good deal, but we're saying use your premium dollars for something else. It doesn't make a lot of sense from the standpoint there hasn't been a disability company out there that's raised rates on an existing policyholder in the last 30 years. So again, not a risk that we typically associate with having to buy a benefit. Again, maybe those dollars could be spent someplace else. Residual disability, and again, some will call it residual, some will call it part-time disability. All of these plans have provision in place that if your income has been affected greater than 20%, in other words, you've had a loss of income of 20% or greater, there will be a partial or a residual disability benefit that will be paid to you until you reach at least 50% loss of income, and then it goes into the full disability model at that particular point. Again, these are all riders that are available. Most plans will cover 2 years for mental and nervous disorders, alcohol and drug abuse, and there's a rider that you can put on there that will extend that out for the length of the contract, whatever that length may be. So the other optional rider I wanted to kind of go a little bit deeper in, and that is that the mistake proof which comes with that return of premium. Since 1972, Illinois Mutual's returned more than $115 million in premiums back to policyholders as their policies have matured. That's a pretty significant number. Again, return of premium makes sense with some clients, others it doesn't. It just depends upon the benefit, their age, and the length of benefit that they've purchased. You have to make that decision, and whether or not that's an important feature or factor with your client. It meets a need for a lot of folks. Others are not concerned about that. They understand that insurance is about risk, and I've got peace of mind in knowing that I have coverage. I'm not so much concerned about getting my money back if I didn't have a claim. It's like buying homeowners insurance. You buy it and you hope you never use it. It's there if you need it, but nobody expects to have their money come back to them, typically from a homeowner's perspective. So, and then finally, things to talk about is that the extra cash that's available to you. This is paid directly to the producer. With Illinois Mutual, what's needed is 2 cases of disability, and those 2 cases have to equal, I believe it's $2,000, if I can remember what the slide says. Yeah, it's their Fast Start bonus program, and that is once you become contracted with Illinois Mutual, in the first 90 days, if you present and write 2 cases equaling a total of $2,000 of annualized premium, not collected, but annualized premium, Illinois Mutual will send you an additional check over and above your commission of $500. And that's paid directly to the producer, which is a nice incentive to do business with Illinois Mutual when you're looking at disability protection. Most of you folks are going to work with clients that work in that blue collar sector. Why not take advantage of that? This is an additional $500 that's available to you by just simply writing, 2 cases. I talked to you about the Western Southern producer that's written 3 or 4 cases. And there were 3 different occupations of people that he knew, and the overall total premium right now is about $2,800 with those 3 cases. Guess what? Those 3 cases are issued. He has a $500 bonus that's going to be coming to him. So, exercise that. Be aware that that's available. If you got questions on it, by all means, holler at us. Let us know, because we're all about improving the way that you do business. We've tried to make things as simple as we possibly can, as streamlined as we can. And from our quote request form to the microsite that we have built for Western Southern agents, I'm going to take you to the microsite real quick. For those of you that have not been on it before, this is a good way to understand how this works and where you can go. So bear with me as I bring that up. This was built exclusively for Western and Southern producers. It's available only to you, and it's designed to make your job a lot easier and make things run a lot smoother for you. You got a client that you want to get a quote on, you just simply go to this site, and once this comes up, you see the black menu bar across the top there. Come over to Getting Started. You hover over it. What's going to come up is the partnership information for long-term care. You can contract right through this site, and you can request a quote. If you go down and you click on Quote Request, what will come up is disability, the long-term care life hybrid quote request, and then Peterson International, which is a disability carrier for specialty occupations or for clients that are over the age of 60. And you just click on one of these, and it'll take you directly right to that request itself. On the same site, if you go to product information and click on disability income, what will come up is the portfolio for every one of the carriers that you can write disability coverage with. Come down here to Illinois Mutual as an example. There's going to be product overview. There's a complete product guide, a needs calculator if you wanted to use that, an occupation guide, the latest consumer brochure that you can use with your clients, underwriting guides, resource guide, campaign planners for doing a campaign of disability in a small business. All of this information is available on this microsite. All of them, for the most part, are PDFs, which means that you can download them and print them and utilize them either for yourself or for your clients. Use that microsite. It's got a lot of great resources on it. Again, designed specifically for Western and Southern producers. We just want to make sure that we've given you the tools that you need in order to be able to write disability protection. With that concludes the formal part of what I wanted to give you this morning. Hopefully this has been beneficial for you, gives you a better understanding of disability. We wish everybody stay safe, keep your social distance, as they say, and we hope that you have a good week selling. And if there's anything that we can do, by all means, certainly reach out to us, email, phone number. All of our information is on your agent portal with Western Southern as well. But make a note of the microsite. make sure that you know where that's at and how to get to it and how to reach us. So until the next time that we speak or the next webinar that you're on, good selling, and we'll talk to you again. Thanks.